Coming to you live from our studio in Atlanta, Georgia, this is the A1 Trading Daily Show. Whether markets are rising or falling, we're here to keep you up to date with the latest market news. Join us as we trade currencies, commodities, and indices live, Monday through Friday.
Hey everybody, welcome back to another live stream. Sorry for the delay in getting started today. Yet again, more internet issues. James, what's going on, man?
Nothing much. Might be able to see me a little bit better if I turn my lights on there, not sit in the darkness like I normally do.
Yeah, you got all those fancy lights in the room, so you can have like a colorful rainbow behind you all the time. James, what's going on in the markets in the latest? Well, we had CPI numbers. Did you see those CPI numbers for Australia last night? Did you get a chance to see those?
Yes. Yeah. So CPI numbers for Australia last night. Quarterly CPI rose just a little bit up to 1.4% from 1.3%. And yearly CPI actually dropped to 6.3% from 6.5%. Not a whole lot going on today. We did have core durable good orders for the US dollar, core and normal durable good orders that both came out a little bit better than expected. But other than that, nothing really going on. But this is leading us into the finishing stretch of the week where we do have some more major news events happening. First off, tomorrow morning, advanced GDP quarterly advanced GDP numbers, as well as unemployment claims, both happening at 8:30 tomorrow morning. So that will be a big one for sure. We'll be streaming early for that one. So we had a little bit of technical difficulty, started a little bit later than we normally do today, but tomorrow we will be up and at it earlier than normal at about 8:15 tomorrow morning in preparation for the advanced GDP numbers as well as unemployment claims. Later on Thursday, the Bank of Japan is going to release their new monetary policy statement. And then on Friday, we also have some more big news events happening in the morning that we'll be streaming again early for so that we can watch the market reaction live. But that is Canadian GDP numbers as well as core PCE price index for the US dollar. So not a whole lot going on today, but tomorrow and Friday especially, we have some big news events that, again, we will be streaming early for that I'm sure will cause a little bit of volatility, if not a lot of volatility in the market.
No, it's an active week. I mean, today, like you said, might not be the most busy in terms of volatility or news, but the numbers that came out this morning, for anybody in the audience who's not familiar with durable goods orders, it's kind of a similar to like PPI in the sense that what it's looking at is like orders for in fact, they've got some cool little data here. It's indications of buying products such as automobiles, computers, appliances, and airplanes. And it's a lot of times like looking at what businesses are buying. So it can have a lot of impact on just showcasing the economy. Now, of course, it's not as big as Friday's numbers and that sort of thing, which we will be looking forward to. James, thank you for the update, my friend, and we will see you back on maybe a little bit later.
Yep. Thank you. See you later.
All right. Yeah. So guys, I wanted to take a look at a couple things here as we get started. The dollar tanking pretty hard here as we get started. I wanted to update quickly my positions, and then we'll bring in some guests to collaborate on the stream with me here. Chandler and James, if you guys want to get Frank on the line, if his internet is good, we can get him as well for today. And then in terms of the dollar price action today, guys, we did see a resurgence, a jump back up, but then found a lot of sell pressure coming into today with this number coming out this morning, and also a little bit of fear from the FRC situation. If you guys aren't familiar with this is First Republic Bank. It was one of the first sort of bigger names to collapse here in the United States and cause some serious volatility and fear to come into the market. Today, we see it continuing to have problems, and that's causing a little bit of fear in the markets. Notably, we see gold trending higher. Remember, guys, we talk about this often when we discuss gold. We talk about that fear gauge. If there's fear in the world, a lot of times we do see gold catch a little bit of a bid. I'm watching, especially as we come into GDP numbers here this week, to see if we can actually get a breakout of this gold chart, in which case I'd actually be looking to get long. So that's my take on it. That's my opinion on it. I'd love to hear what Frank has on it. We'll bring Frank in for a second. Hey, Frank, what's going on, man?
Hey, how's it going?
Hey, thoughts on gold? What are you looking at?
So first off, I checked the bond yields falling for the third straight day.
Yes.
So that's a good sign for gold. I still think the same thing as what I said yesterday. Price is not, it doesn't look too healthy to the upside, but I think the next sort of like resistance, if it like reached it before like turning back down, would probably be in the 2030s or so.
Yep.
And even then we may see a complete head and shoulders, and by then I'm not really sure, but short term, like I guess it could rebound today, but I'm more focused on the market because of tech earnings going on right now.
So which ones? But are you looking at the S&P? Well, I guess Nasdaq, right? Are you looking at Nas at all?
Yeah, I was looking at NAS because they're all tech, but Microsoft beat earnings this morning, kind of boosted morale for the whole tech season of earnings. Amazon came up. They all opened higher, much higher. I think they're kind of on their way down again, but
and Microsoft, for those of you guys who do not track stocks, Microsoft and Google, Microsoft especially, had like stellar numbers. Like it was very, very impressive. Also, Visa had really good numbers. And then we also had Google report good numbers. So, I would say that that's promising for NAS as a whole. And we do see it still, despite some of those numbers, giving back some gains, hasn't moved a whole lot. Do you think any opportunity to the upside is there for NASDAQ on pullbacks here, Frank?
Yeah, I do. Actually, on the 4-hour, it came down to its 200 period, a simple moving average.
Mm-hmm.
And then it jolted upwards. And then right now it's showing some rejection from the lows. I kind of like how it looks right now. And I think we get a close at 10 of this 4-hour candle. So if we get a strong pin bar to the upside, I think we have a shot for a long here.
Yeah, that's an
again,
interesting.
it's more so like a very short-term trade. I don't think stocks have too much room to run, but
Sure. Some good sentiment coming in from good earnings numbers from Microsoft, Google, and Visa. So, I'd like to also make sure we bring in our third guest here. We'll say hello to Mr. Tom. He was with us yesterday. Tom from Simply Forex. What's going on, Tom?
How's it going, Nick? Yeah, all good, thanks. Hello, Frank.
How's it going?
Welcome back to the stream. And
seeing you every day now, Nick.
Yeah, I know. It's been too long. It's been like a full.
We'll be moving
hours.
in with each other next.
Yeah. Hey, so Tom, Frank and I are talking a little bit about the NASDAQ.
Right.
Frank made a good point. I'll show you my chart just for a second, catch you up to speed. We were looking at the NASDAQ, and Frank made the point that off the 4-hour chart, we had sort of this nice candle forming. We had for the audience members, again, maybe you don't watch stocks or anything like that, but we had earnings reported for a couple big names last night, some of the really big names, right? And these are, Microsoft, Google, and Visa, all three very important to, watch in terms of the state of the economy, state of markets, and that sort of thing. And all of them sort of were impressive. Frank's making a point for, this pullback could turn into something more in the short term. What do you think, Tom?
Yeah, well, from a technical standpoint, it's at a brilliant level for buying, if you ask me. It's still, you can see structurally on the weekly chart, it's, clearly in an uptrend. It's come back to a really interesting support level. And I think this trade has room to move into, potentially back up to these highs here. So from a weekly technical point of view, yeah, I like buys. And also here, you know, this daily candle, yesterday's daily candle, bearish, but, you know, had this large wick that closed back above these lows. So again, you know, I like this gray zone through here to buy this indice from.
At what point, and I'll leave this to either one of you guys, let's say NASDAQ has something come out, you know, more hawkish Fed notes, something from a technical perspective, where would you guys stop out? So I'm long the S&P 500. I've got my screen shown right now. I'm already long S&P. I don't have a position on NASDAQ, but let's just say I did, or either of you guys, you both seem like there might be some upside in the NASDAQ, which I would tend to agree with. Where would you guys put stops, and would you be entering just at sort of market levels where we currently trade? You know, in terms of stops, at what point do you call this good if it goes wrong? Because again, as we always talk about on the streams, it's, you know, whenever you take trades, you've got to consider what you're going to do if you're right, what you're going to do if you're wrong. Frank, what do you think?
Yeah, so I think right now would actually be a pretty decent time to enter. If we're looking at the daily or the 4-hour chart, we're kind of still at like the bottom portion of where price has kind of hovered within the month of April. So we were below average, and now we're kind of hovering just slightly above like this small resistance level. So you know, I think if we have room to run, we have probably like 2 to 3% to the upside. And again, price has just been going up and down for the past month. So I kind of think where we are now is sort of like a, you know, short-term discount, especially with this positive earnings news coming out.
Yeah. It gives a
Oh
nice
yeah, in
catalyst.
terms of you said stops too. I mean, you know, the market does make lower lows and then all of a sudden bounces all the way back up, makes it a higher high. So it's kind of unpredictable. But I would probably, to mitigate risk, would either put a stop below this 4-hour candle once it closes, or even below this other one around like 12,700.
What's interesting about that too, Frank, is that if this 4-hour candle, what you're saying here, I'll showcase my view for a second. You know, if you're talking about a stop below this candle, and this is where stop loss management can be really important, because, you know, let's say a trade happens here. If, you know, you have options, like for me, I'm more of a swing trader, so I'd be willing to like comfortably put on a little bit more of a swing size here or a stop size. But the pros and cons here are that if you're right about that, like if this is actually going to your point, show strength and continue, the risk to reward becomes like really, really good. Just returning back to that high, you said a couple percent to the upside potentially off of this little catalyst. You know, this becomes suddenly a 5-to-1 trade. So, you know, if this in fact is sort of turning into a bigger move here, you know, stop loss placement is important in that sense. It makes your risk to reward. Whereas if we widen that stop out to here, you only talk about a 1.65 to 1. So risk to reward is something really important, because again, as traders, we're trying to find the best possible scenarios where we can make the most and lose the smallest if we have to. Tom, what do you think on NASDAQ in terms of stop loss placement entries? What are you thinking there?
Yeah, totally agree. That H4 candle, you know, I would look for lows around here, like Frank said, around the 12,700 level. Personally, I would like to see a break of this level through here. Yeah, because I like to be, I like to be with H4 structure, or at least H1 structure. So I would like to see a breakthrough here, retest, just to confirm the move, and then I would look to buy this pair. But yeah, and totally agree as well. The risk to reward is potentially, you know, great from this level if we could take it back up to some of these highs. But yeah, I need that structure break for me to add an extra piece of confluence and give me the confidence to take this trade.
Sure. Yeah. No, and that's the cool thing about these streams is we talk a couple different styles. Some people want to see more breakouts. Some people want to trend follow, mean reversion. It's always cool to see different takes on it. Last night we had the Australian CPI numbers come out, caused some volatility on the Australian dollar against all other currencies as well. I was personally looking at the Australian dollar, and again, CPI numbers. For those of you who did not see the number, I'll pull it up here in just a second. So let me go Forex Factory. So we had CPI numbers come out last night for Australia, and year over year, it fell. It was expected to be 6.5%. Inflation came under at 6.3%, which causes an interesting lack of demand for the Australian dollar, as there was already sort of a lack of urgency in terms of central banks the Australian, the RBA, right? We have interest rates. In terms of globally, we have comparing Australia to the US, right? We have a pretty big divergence there where the US has a much higher interest rate. This makes the US dollar in many cases more attractive. Well, we sort of saw that expectation continue to widen the gap yesterday with lower than expected CPI, because again, high levels of inflation caused the central banks to keep this number high, and low levels of inflation, like we saw out of Australia last night, show less urgency to keep this number high and could actually, rapidly decrease the value of the Australian dollar, which we sort of saw. My opinion is that if we get sort of pullbacks to the 61.8% retracement, some sort of retests, it might be an opportunity to look to get short. And I want to go to you guys on that. But right before we do that, we're going to just take a quick break. We're going to hear from our commercial here, and we'll come back to the charts and I'll ask you guys about it. I'm sorry about that. I meant to do our commercial for the Edge Finder. We're new to this stuff. Try it again. Cool, guys. And yes, just a quick break to let people know that if you want access to the data that we're using, you can get it by sending us a direct message right now. Click that link. It'll open up this conversation with us there. So we were talking just a second ago about the Australian dollar. And Tom, I'd love to hear your thoughts on this. After CPI, again, Aussie down. What are your take on Australian dollar, any other pairs that you're watching in terms of this?
Well, let's look at Aussie dollar, US dollar, because it's quite an interesting one on the weekly chart. So I consider this a clear downtrend on the weekly chart. If we imagine this level through here was the last low on the weekly chart, this candle here broke those lows. So for me at this point, we're in a downtrend. Technically we're in a downtrend.
Sure.
And, I pay a lot of attention to candlesticks and what they are telling me. And then just look at the wicks on these candles. Look at all of this selling pressure on the weekly chart. It's just nothing but sellers in there. And you can see prices coming down now as we speak. If we drop down to the day chart now, so on this weekly chart, potentially back down to these levels. Okay. That's a much higher time frame view, obviously. But the day chart, yeah, again, it's still coming down. I would only be looking for shorts, really. We're gonna face a bit of resistance here, but if it breaks this resistance as well, then nothing but shorts for me on Aussie dollar, US dollar. And I really like that graphic about comparing the interest rates. It's just a cheaper currency, if you like, compared to the US
Yeah.
dollar.
Yeah, it's always an interesting one to look at when we're talking. At the end of the day, interest rates are a driving force when it comes to currencies, whether they're rising, whether they're falling, et cetera. And so when we get those weak numbers in terms of inflation, now, of course, inflation on the decline is not necessarily bad. In fact, it's probably great for people of that country in terms of the price of goods not rising so fast and that sort of thing. But in terms of the currency and the value of that currency, interest rate hikes, as we saw with the dollar in 2022, were a really driving force. Where the U.S., if you ever are curious on the impacts of interest rates, right? You look at the dollar during 2022, and it was just nothing but straight shot up because in terms of the central banks, the US was raising rates the fastest of the major currencies. So kind of an interesting thought there. Frank, what do you think on anything on Australian dollar? You have any interest in this pair, or are you kind of avoiding it? What do you think?
Sure. I notice a lot of correlation between this and the S&P. So if the S&P starts having a good week with earnings and stuff, it's probably going to do the same. But I can't remember where you drew your fib level. I don't think it really has that much room to run, if I'm being completely honest. If it does pop up, I see it sort of in like the 0.6638 level where that previous top was. And I only say that because I know the dollar is weak, but it's not as weak as the Australian dollar. And I know if they keep selling, my sentiment might start to flip. But I think when it comes to these two currencies, the buck is much weaker. And like Tom said, this is a really strong downtrend. So I'm not really looking to go for any longs in the meantime.
Yeah, no, I would, in terms of upside, I think it would be limited, especially if I had to pick, I'd rather be long indices than the Australian dollar, just because, again, that central bank lagging behind potential is a pretty strong story when it comes to the currencies. What else are you looking at, Frankie? You have any ideas? I'll open up to anything that you're sort of looking for.
So I entered into euro dollar this morning.
Okay.
Euro strong. I bought at this break. At this level was 1.1076. Price has pretty much come down to break even so far, but I like the second test and then the break above. So I'm just kind of holding on to this with stops below this recent run up. So, in the 0.096 something, just to give the trade room to run, because it could pull all the way back down here before making another move. So I just like being in euro dollar right now. I'm confident in the like the COT reports that are just heavy on euro and
so you're
getting
long
lighter and lighter.
euro. You've got your stop below structure there. Where are you targeting? You think it's headed back up to that? You've got that orange zone drawn in your chart.
So let me go to
it's headed up there.
Yeah, I think its next stop, if it were to continue running, is probably somewhere up here in the 1.116, I don't know, somewhere close to where this high was. So
yeah, very interesting. And I'll show my view of euro. I'm sort of in the same boat. We had on the 4-hour chart, this level of resistance came in. Again, it held very nicely, but today, to your point, and will be very interesting. This is a 4-hour candle, and you kind of mentioned, in terms of the 4-hour candle, watching for this close. If we get like a strong close here, I think I'm totally with you. Like the euro could just keep trending higher. Again, what this does a lot of times is as you get a break above, if it's able to hold that, it like sort of invites a lot more buy pressure into the market, because a lot of people are like, hey, this thing is going higher, it's healthy, you know, buyers are holding there, and you know, on up and away kind of thing. So I would generally agree, especially when you mentioned COT data shows institutional money is very long euro. I mean, that's a big deal, right? So we have there of in terms of the currencies for the currency traders in the audience, you know, the euro is the biggest long position of institutional positions proportionally wise. So, you know, when we're looking at all the different currencies, we could actually even filter this by currencies for a second. You know, we could take out things like oil, US 30, silver, SPX. Let's just take these out for a second, and we can just get a look at the currencies by themselves. And let's take out ZAR just for the sake of it. What we can see here is that, you know, the euro is our favorite. It is the number one in terms of institutional interest. Now, of course, on the flip side, we have our biggest short positions on the JPY, the Canadian dollar, and as we just got done talking about together, the Australian dollar is also very much on that heavy short list from institutional positions. On the long list, we have euro. We do also have dollar, and we also have the pound, which this is sort of a newer ad, because if you guys have been watching, you know, our content for a while, then you know that the pound used to be like way over here. Like it used to be such a heavy short position from institutional traders. So we've actually watched this pound creep up into the right. This data, again, we mentioned it earlier, but if you guys want access to it, we're going to drop a link in the chat right now. You can click. If you want access to the data that we're looking at, click this and ask us about the Edge Finder. It is our software tool here at A1 Trading. So we asked Frank, he's got euro dollar long. Tom, do you have any trades open or anything that you're looking to get into today? We'll let you take the floor for a second.
Okay, so yeah, a couple of trades I've been looking at today are these. So New Zealand dollar, Canadian dollar. Been looking to short this pair. If we start with the weekly chart, yeah, we're clearly in a downtrend on the weekly. Okay, so, and we're coming out into an interesting area of potential resistance here. So we can see this downward structure. Does it have more room to retrace? Potentially, but I'm thinking this support level, now resistance, will take this back down to potentially these daily lows, weekly lows, sorry. If we go to the day chart, I also like the fact that structurally we were in a downtrend, and these lower highs, this last high held. Yeah, I like this. These are the things I like. I'm very sad. But yeah, this held, and this wick here that held onto this high and bounced off this moving average 20, you know, gives me extra pieces of confluence to take this shorter. I actually entered this trade earlier. So on the H1, I'm just looking for a structure breakdown. So as soon as we got, this is now the H1, as soon as we got this structure breakdown, tested these last highs through here, I entered around here and just took price down to this blue line first of all. This was my first target. And this is where I close 80% of my trade. Yeah, okay. I close 80% of my trade, and then I let 20% run for 12 years, maybe. But you get the gist. I can just let that run. Sure. So that's basically what I look for, guys. I look for a bit of weekly and daily confluence. They're on the same page. And then I look for H1 structure breakdown, like this New Zealand Canadian dollar short. And yeah, I'm still in it for 20%.
So in terms of the remaining 20 that you have on, if it rolls over and breaks down further, at what point do you take the rest off?
So yeah, good question. Yeah, so what I'll do, I'll trail the 20. So, you know, initially my stop was up here. I'll move it to here. I'll see what price action does here. I'll move it to here and so on. But my higher time frame target is this blue line down here. Okay, sure. So I'll look to take the remaining 20%, you know, back at these. These are daily lows down here. So this is what I'll be looking to do. If it takes my trailing stop out, no problem. I've already secured some profit, but yeah, I'll be looking to take this all the way down to here.
Sure. Very cool. And Tom here has been coming on the A1 Trading channel for a while, guys. We do want to recommend that if you are looking for more content, make sure to check out his channel. We dropped it in the link in the chat box here. We're going to now take a quick break. We're going to hear from one of our stream sponsors here who are making this possible. And James, we'll let you take it away here.
Yeah, thanks, guys. So, attention A1 Trading Show fans. If you're looking to get access to the Edge Finder for free, our partnered broker 8cap is offering the fans of the show 100% free access to our trading software. To get access, all you have to do is click the link down in the description below, sign up with 8cap, and deposit $1,000 or more into your trading account, and then just let us know when you're done. All you have to do, again, 8cap, one of our sponsored people for the live stream here. They are an amazing brokerage. And if you sign up with them and deposit $1,000 or more into your personal trading account and let us know once you've done so, we can get you access to the Edge Finder 100% for free. 8cap is an amazing regulated broker that offers many assists to trade, flexible leverage options, has amazing customer support. The list could go on. 8cap is amazing. We are so proud to be sponsored by them. Click the link down in the description below to get started. Deposit $1,000 or more into your personal trading account. Let us know, and we'll get you hooked up with the Edge Finder for free. Now, back to the A1 Trading Show.
Awesome. Thank you, James, for that update. And thank you to both of you guys for joining me here on the show. It was a lot of fun. I think we're going to probably move on from here. And again, thank you guys, as always, for coming on. Tom, it was good to see you. And
cheers,
maybe
Nick.
we'll see you back soon.
Yeah. Cheers, Nick. Cheers, Frank. See you, guys.
See you, Tom.
See you again.
See you, guys.
And then Frank, and then also, if you want to just back out, I might just go a few more minutes. I've got a couple things I want to chat about, and then we'll catch you back as well on the next one.
Okay, sounds good.
All right. Yeah, guys, so I just wanted to follow up here for a moment and do a little bit of updates on this gold move that I'm looking at. Again, we saw price basically find resistance here at this 2010 mark. For those of you guys who are watching gold alongside me, I'm looking for a breakout of this level. I've got a video coming out later today, which will be going over my full breakdown on gold. I have a plan to do that. So keep an eye on that one. Again, looking for a break, retest, continuation kind of concept. I've been hunting for this move for a while. I do not have a position on gold at this time, but I'm looking for it myself. So that's something I'm watching out for there. Is 8cap back on TradingView yet? Good question. I don't think so. There, as far as I know, I have several friends in the brokerage world. Apparently, it's a very technical and difficult partnership to have, and I think that they're still working on it. But I haven't heard the latest from 8cap. Did you review UJ already? Let's do UJ for a second. I'll take a look at this one. USDJPY here off of let's look at the daily chart for starters. Seems like it may have put in a lower high on the technical perspective. So we have a supply zone coming in here, potentially. For those of you who are watching UJ, part of the reason it's down here today is with bond yields down. We see bond yields coming down, closely tracks, by the way, the dollar yen. And when we look at this, the dollar yen here, in my view here, the concerning thing is that, you had this upward structure, but if this does in fact break, right, if we don't get a snap back and break through the highs, this thing very well could continue its path lower pretty easily. I'm not necessarily a big, bull for the dollar yen, but I'm also not a bear either, because again, we have from a Edge Finder perspective, we have a +5, which, as you guys who are familiar with the tool know, that is generally a sort of more of a bullish outlook when it has a higher score. However, for a dollar yen bulls, here's what I would say. If we can hold structure, like if we can sort of get some reaction off this, I'm very interested in dollar yen longs, but it would have to be something like this: breakouts, retests, continuations. Again, I think that if we break this level, we have a solid chance of looking for pullbacks to get us up to like 137, 0.8, right? Maybe even up to like 138. But again, right now we're seeing some pretty bearish price action as we start the day. I'd like to see a breakout of resistance in order to trigger any long ideas. Okay. So that's where I am at with dollar yen here today. And again, really, really weak today. That's probably going to cause some bullish moves on gold, as these, of course, have some inverse correlation to them. I'm still in my S&P 500 long trade. Let's take a look at that. It's not going so hot right now. If price breaks too much underneath this support zone, I will be out of my trade. Let me see if I can pull that up for you guys. And again, going against me here, down about $300, $400 on this trade. Support zone. Let me actually, I'm going to change my, this is bothering me. Let me get my thing here to be correct. Can I do chart settings? And I like my candles to be like a more sharp green and a more strong red. Let's just do that real quick. There we go. It's a small thing, but it was bothering me. Anyways, yeah, so this is my current positions that I have open. Let me favorite the 4-hour chart as well. Concept here being, I'm looking for price to hold this. If it doesn't hold here, again, we had some good numbers come out from Google and Microsoft. If these do not hold, or I'm sorry, if the S&P does not hold here today, this zone that I've got marked up on the chart, it will be a cue for me to go ahead and get out of this trade. So I'm looking for support to hold. If it does not, stop loss is just below. So this is kind of where I'm at. If you're new to the streams, welcome. Thank you for being here. Hit that thumbs up button, subscribe. We go over all sorts of different markets. We talk currencies, indices, commodities, all sorts of good things. And we had a couple guests on today. It was fantastic. I'm going to go ahead and wrap up the stream there, guys. That is the latest from myself and our team here at A1 Trading. If you enjoyed today's show, make sure to subscribe for more content. And with that, we'll see you back in the next one. See you guys later.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And remember, you can improve your trading performance 30 times faster with Forex Tester 5. Backtest your strategies using real historical data. From all of us at A1 Trading, have a great day, and we'll see you next time.